How does this gel with what you're seeing in the markets at the moment? Does that seem to make sense?
Well, definitely that's been a big recurring theme right now about the money moving out of sort of EM going into developed market. And I think the story has changed a little bit. I mean, early in this year, the big fear was really that Asia was kind of overheating and that central banks have kept monetary conditions too loose for too long. And that inflation risk has really created a lot of concern about the risk of much more sharper tightening and hard landing later on. But I think the story shifted a little bit because we now have the Mideast concern and the concern about oil shocks. And that kind of added another layer of risk to the region. But, you know, obviously this creates a lot of uncertainty. Now, if we think the oil shock is relatively temporary and that kind of tapers off, then I think there are opportunities, obviously in the EM world, especially in Asia and parts of Asia, to do well. But at this juncture, I think that things are still a little bit fluid.
So is this move into developing markets out of, developed markets out of developing markets, was this come too early, do you think?
Well, no, I mean, I think, last year there was so much optimism in emerging markets. So I think to a certain extent, with U.S. sort of surprising on the upside and sort of people are making a huge reassessment about earnings and relative valuation across markets, that's why we've seen this sort of portfolio rebalancing. And then everybody was very worried that growth and inflation continued to surprise on the upside, especially in Asia, and was further exacerbated by concern about food prices. That created a lot of concern. Now, I think the food issue, I think some of that has dissipated somewhat, but I think you have this sort of renewed risk about oil. But our view in Asia is that we do think central banks for a number of countries are really not that complacent. I mean, a lot of central banks have been taking more proactive steps to tighten their monetary conditions, and therefore that vigilance or relative vigilance among some of the central banks should prevent them from getting too behind the curve on inflation and help sort of engineer a more manageable landing rather than a hard landing in Asia.
Well, in terms of then investment opportunities, Johanna, for those banks that are behind the curve, maybe they may be the countries where you might want to certainly avoid buying into some of those stocks, some of those currencies even.
Well, I mean, to a certain extent, monetary tightening can be done via interest rates or via exchange rate appreciation. And so countries that are sort of going into this cycle where growth is quite strong, inflation remains quite high, we're already seeing some of the central banks, more tolerant of letting their currencies appreciate a little bit more to tighten monetary conditions. I mean, for example, we've seen Indonesian rupiah, for example, do quite well recently. And I think the theme, with inflation being a lingering concern in the meantime, I think there's more gains to be made on some of the intra-Asia currency plays. For example, renminbi, Sing dollar, ringgit I mentioned earlier on the external shock. And even, for example, Philippines, the central banks could be a little bit more tolerant of letting the currency move, given that their growth inflation momentum is relatively quite strong at this juncture.
Are those currencies then going to outperform other currencies like the Indian rupee or the Korean won?
Well, I think if oil price shock continued to be a lingering issue, then I think on a relative value basis, that could be a concern. That could be the relative pair. The other thing that we put out in our piece that we analyzed is we noted that Taiwan, for example, has actually tightened monetary conditions quite a bit over the last couple of months, mainly because of the very sharp appreciation of the Taiwan dollar on an effective exchange rate basis. So to the extent that inflation in Taiwan is much more subdued relative to elsewhere, maybe that's another currency that may lag some of the other central bank currency pairs.
Okay, great advice. Johanna, thanks for that. We'll be back with more right after the break.